All right, what is up, everyone? Super excited for today's video. Excited to bring you the latest trade idea that we have on TLT. We're going to dive deep into TLT, as you can see on the 4-hour chart, the daily chart. We'll go over the warning signs that I posted for everyone before this massive sell-off. Okay, TLT has a very good buy-sell indicator. We're going to break that down so you guys can avoid massive sell-offs like this in the future. Then we'll break down the larger time frame on TLT, talking about the weekly chart. Going to be a really great video. Be sure to smash that like button, subscribe to the channel, help me get to that 10K subscriber goal that I'm trying to get to by the end of the year. Now, on top of the bond market, I've also got some really, really amazing data that I want to present to you guys, going over the stock market, talking about what happens once we see new all-time highs in September. We'll talk about the rally broadening in Q3. What are the some of the results because of that? We'll look at asset performance, Bitcoin and gold. Okay, actually leading all assets. So we'll break down the Bitcoin chart. We'll break down the gold chart. Go over what it is that I've been paying attention to on those. And then we'll talk about what sectors are above their pre-2022 bear market highs. The whole purpose of this is for people looking for catch-up trades, right? For those people saying that the market is overvalued and looking for potential areas to find value, there still are sectors of the market that are lagging behind. So we'll break those down in the XLY, XLE, and then the XLRE as well. And we'll talk about the January barometer. This is very real. Stocks tend to peak in January or December 56% of the time. That's out of 12 months. 2 of those months, the stock market peaks. Okay, so we're either about to come into a bear market, right? And we're about to top. Okay, so for all the bears out there, this is really good, potential bearish data for you. I'm not trying to come off overly bullish or overly bearish, but rather just present the raw facts and data to you guys and then provide my analysis on top of that. Okay. So we'll dive deeper into that. We'll talk about how the first half, a strong first half typically leads to a strong second half. And then we'll go over, the targets by analysts and how targets by analysts have been lagging the S&P 500 pretty much the entire year. What that's going to mean now that we're in the end of the year, specifically, we'll talk about how bull market returns have, tiered with market cap size. We'll talk about some of the forward PE ratios in the Mag 7, the S&P 500, and then the S&P minus the 493, or I'm sorry, the S&P 493. So basically minus the Mag 7. We'll talk about some other good stuff about how a strong Q1 to Q3, how those years typically finish strong. And then also the S&P 500 tracking its historic average, pointing to further but slowing gains for the rest of the year. And then we'll dive into, some of the labor market reports here recently. And this data is going to go through last month. Okay. So, basically up until the end of September. And last but not least, we have residential construction jobs remain our source of truth. Okay, we'll dive into how this chart right here is basically an economic indicator and a recession indicator as well. Okay, so it's going to be a really amazing video. Smash that like button, subscribe to the channel for more. But as always, the content provided on this channel is for informational and educational purposes only, and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through that disclaimer, and we'll go ahead and get right into the video. So the very first chart that we will dive into will be the most recent trade idea on TLT. Okay. Now you have to remember, okay, as a trader, the market narratives can often influence your trades and news headlines can influence your trade. Okay, that's very possible. Sometimes these headlines and market news come in your favor and sometimes they don't. It's very hard to be a buyer when there is very bearish news. Okay, when there is very bearish, sentiment on something. But one thing that I do want to point out, is that oftentimes we look back at those things as signals. Like, okay, well, we were extremely bullish. Look at this super bullish news article that posted that pointed out a top. We were extremely bearish. Look at this news article that pointed out a bottom. Okay, so you have to remember these economists, it takes a lot for them to get things published. Okay, not only do they have to come up with the concept, come up with the narrative, come up with the general consensus, okay, that people are bearish or bullish on something, then they have to write the article, get an editor, get someone to approve the article and read through it. Then they have to get someone to create, a thumbnail if it's a YouTube video, for instance, or get someone to create a cover art or something like that for an article, and then finally get the publisher, right? So these things can often be, contrary signals. So if you're a contrary trader right now, TLT has gone through a massive sell-off, right? We were trading above $100, and now we went as low as, we basically went right around $91, let's call it. Now, for me, from my technical standpoint on the 4 hour chart, what I'm looking at is I'm seeing a potential wave one down, two up, okay, three, four, and this is five. Right now, wave five could extend lower, right? That's always a possibility, but typically the market moves in 5 wave and 3 wave structures. And so if this is a 5 wave structure down, then we're going to get a bounce up from here. Okay. And so the whole thesis of this trade idea was, hey, we're looking at this, and this is a favorable risk to reward ratio. What does that mean exactly, right? What's a favorable risk to reward? Well, if you're only risking one or and your reward is only one, that's not typically a favorable risk to reward ratio, meaning that you have to win over 50% of your trades for you to be profitable. If you have a 2-to-1 risk reward ratio, then you can afford to lose one trade. And if you win on your next trade, you're still profitable, right? Because you lost one. So let's say you lost $100 or $1,000, but on your next trade, you made $2,000 or $200. That is a better risk to reward ratio. And at the current levels that TLT is trading at, not only did we have a 2-to-1 risk to reward ratio, but we also had over a 4-to-1 risk to reward ratio, depending on your own time horizon. Some of the shorter term traders, if you buy at the current levels of the trade idea, targeting the 50% retracement level here, that was right around 96.50, okay, offering a 2-to-1 risk to reward ratio. And if you buy at the current levels targeting the previous highs, that's over a 4-to-1 risk to reward ratio. Now, are you expecting these to come within a week? No. Are you expecting this to come within a month? No. But if we were to see that the result of this bond market sell-off was an over-exaggeration, or rather an overestimation of future economic growth and future economic strength, then it's very possible that we could see a rebound in the bond market. Okay, that's going to be your bullish thesis. Now, one of the big bearish thesis in the bond market has been a lot of the recent economic data. Now, we're not going to dive too much into fundamentals or anything like that. I just dropped a very good deep dive video into the 4 main reasons the market is painting the narrative why the bond market has sold off. Those are going to be really great videos. If you're someone who really truly believes that a recession is coming, and that we're going to see a massive recession, well, most likely the Fed is going to cut rates, right? The yield curve is also trying to uninvert right now, get out of that inverted status. It's very common historically for us to see a recession after the yield curve uninverts itself or reinverts, whatever term you would like to use, maybe a bear steepener, something like that. And so there's a lot of bullish cases for the bond market. There's a lot of bearish cases for the bond market. I'm not going to dive too much to that in today's video, but rather go over the technicals and why this is a potentially good trade setup. Okay. This trade can fail, but from a risk to reward standpoint, depending on your time horizon, you're risking two to make one, or I'm sorry, you're risking one to make two, or you're risking one to make four. All right. So those are favorable setups. Those are favorable trade ideas. You just have to keep your time horizon, in perspective. Am I telling you to go buy $95 call options for next week? No, I'm not, right? But the risk reward setup is there. with the stop loss below the recent lows here in the summer. Okay, right around 89, 82 roughly is going to be your stop loss. And there's a very nice risk to reward setup. Okay, now let's dive into what are we actually looking for, right? What are the signals? Well, from a technical standpoint, the MACD on the daily time frame, and if you've been watching this channel, has been a very, very good buy and sell signal. Okay. I've been using this as a buy and sell signal for almost 3 years now. If you include 2022, 2023, and 2024, and you've been watching this channel, it's been a really good indicator, and we've made lots of money trading based off of this indicator. Okay, so I've highlighted all of the times that we've seen a bearish MACD crossover since last year. Okay, and since last year, it's resulted in a number of sell-offs, both short and extended. Okay, we can see some very short sell-offs over through this time period, some more extended sell-offs through these time periods here. And we're seeing the most extended sell-off period since we've gotten a bearish MACD crossover in the past year. Not only that, we are also seeing the RSI hit the most oversold levels in over a year. Now, I pointed this out to everyone in the Discord and pretty much called it out perfectly, anticipating a 5-wave setup to the downside. Remember, we talked about the 1 down, the bounce up right here, 3 down, 4 up, 5 down. And what I was looking at was saying, hey, we had a 1, 2, 3 down. The RSI hit its most oversold level in the year. A lot of people have a huge misunderstanding of the RSI. They look at it as a buy sell indicator. Oh, if something's oversold, I'm going to buy. If something's overbought, I'm going to sell. That's not the case. The RSI is a momentum indicator, okay? Meaning it's going to tell you what the momentum in the trend is. If you take a look at what happened when TLT was oversold here, what did we do? We bounced, dropped lower. And I pointed this out for all of the Discord members, right? What happened about over here when we were at our most oversold levels that we've seen so far? What did we do? We bounced and continued to drop lower, right? Because things are oversold, it does mean that it can bounce, but it doesn't mean that there's not weakness, right? And so just because we get a bounce, oftentimes this is referred to as a dead cat bounce, and we continued lower. We created a bullish divergence where we had a low, lower low, low, higher low, right? So now we're starting to make an uptrend in relative strength, uptrend in momentum, while the stock is continuing to make a downtrend, and that actually put in the bottom for TLT. And that's something that I'm going to be looking for as a potential indicator for when TLT may potentially bottom. Okay. When I pointed out the most recent MACD crossover, I said, hey, there are 4 gaps down to fill. And I highlighted all of these, right? Here, 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 and here. If you're not familiar with gaps, they tend to fill historically many times in the market. It's more so a question of when rather than how or why. And so these gaps, if you're aware of them and if you're aware of technical signals, well, then you're going to be more cautious, right? If we're getting a bearish MACD crossover and we're close to 2 gaps down, you're going to say, all right, well, maybe I need to hedge myself for this position. Maybe it's time to take profit on the long positions that I took when we bought back here, or back here, back here. Many of the previous times that we've bought TLT longs in the Discord, this is a time for you to get cautious and hedge your position or potentially close some of those positions when we get that bearish MACD crossover. Now, ultimately, what we're looking for is going to be a bullish MACD crossover to give us potential confirmation of a trend reversal. For now, we're just anticipating that we're somewhere along wave 5 territory, knowing that it could come down to fill the gap down at 91, knowing that we also have another gap down around 85 to 86 to fill. Okay, so there's still reasons to be cautious in the bond market, but it doesn't mean that there aren't trade ideas presentable to you guys right now, as we discussed in this chart layout right here. Now, when you zoom out even further to something like a weekly time frame, nothing about this screams that a bullish scenario is over. We simply got a breakout, and we are now retesting the breakout levels of that trend line. And we would look to see if that smaller 4-hour chart pattern of a five-wave structure to the downside can complete, and if we can get a rebound back to the upside. So that's what I'm looking at right now when it comes to TLT, is looking to see if the weekly chart can hold this trend line breakout, looking to see if the 4-hour chart can hold our demand levels, and we have our risk already defined in the trade, and we know how to manage our risk in the trade. Not every trade is going to be a winner, and knowing that is going to give you an edge in the market, because once things hit your stop loss, you're actually becoming a successful trader by taking a loss rather than averaging down and averaging down and averaging down until you've digging yourself into a grave. Now, moving forward, there's so much great data coming in the stock market. Okay. I haven't been trading TLT as much since September, and there's good reason for that from technical signals that we just went over. But the stock market has offered countless opportunities where I've been able to capitalize on many trades. So if we talk about new all-time highs in September, those buck the seasonal patterns and are very rare. We have two in the last 500, or I'm sorry, 50 years. And if you look, the average return to the end of the year for the S&P 500 is another 5% higher, with the median return about 4.2% higher. So that is very optimistic for stock market bulls. And there's a few reasons to be optimistic for stock market bulls. The rally has broadened in Q3. If we take a look at this, and this is the S&P 500 and the S&P 493, we can see that, yes, there was that sell-off heading into the Japanese yen carry trade, okay? But since then, everything has rebounded and succumbed to new all-time highs. Meanwhile, the Mag 7 have actually underperformed throughout this entire period here. So what does this mean exactly? Well, this means that the rally has broadened. Everyone screaming in the first half of the year heading into Q3 was screaming that the Mag 7 performance was carrying the entire weight of the market and that this was very unhealthy. Well, everything that the Bears said, came to fruition, and the Mag 7 have vastly underperformed. The only thing that didn't come to fruition was the stock market continuing to sell off and make lower highs. We've actually created a high and a higher high, high and higher high, creating new all-time highs in the S&P 500 and the S&P 493 minus the Mag 7. So what does this mean for you? It means that if the Mag 7 report good earnings and react positively to good earnings, that the stock market gains could still continue to drive higher into Q4 and into the end of the year. Take a look at Tesla, take a look at Netflix, two of the Mag 7 stocks that have already reported, and the stocks have gone higher since. That potentially is a trend we can see forward in the future. Every single stock and all of their earnings reports are going to be different, so there's no guarantees in that. But it really destroys the bull or the bear case that the market was going to fall apart if the Mag 7 stocks started to underperform. Now, the craziest thing about that is that the top performers of the year have not even been S&P 500 or the Nasdaq tech stocks, or the different sectors of the S&P 500. It's actually been Bitcoin and gold, and they still look bullish at the moment. When you look at Bitcoin, there's a massive cup and handle chart pattern forming on the weekly time frame, breaking out currently as we speak, looking like Bitcoin wants to head up to 80,000 by the end of the year, potentially heading into 2025. We've also got gold here. If you've been watching my channel, you've been seeing this Elliott wave analysis on gold for at least a year or two. And we're coming up now on the larger cycle wave 3 projections right around 2850. Okay, now this can extend up to the 3000s to 3050. But this is logical territory for gold to start, consolidating a little bit as we head up towards that 2850 area. Okay, we've got a 1, 2, 3 up, 4 down, and wave 5 of this wave 3 right here is going to put us around 2850. But as a technical analysis, we use these things with crayons. We don't draw them with permanent ink. Okay, Elliott wave projections are not something you live or die by and hold to exact perfect levels. These are just merely projections to help guideline you. And so we're at 2768 right now. We're only 100 points away from the 2850 price target and an extended price target of 3050. We're very close to those levels. Okay, so it's very possible for us to hit those before the end of the year, but I would expect a little bit of some type of gold. Maybe if we hit those targets by the end of the year or somewhere in the near term, a lot of that makes sense to me. We've had many bullish trade ideas on gold stocks, silver stocks, commodity related stocks, metal related stocks. Take a look at things like AG. Call options have gone up like 1,000%. All right. You take a look at things like KGC. Call options are up well over 100%, hitting 200% and different things like that. So there's been multiple opportunities in the metals market, in the gold market, in the silver market. It would not surprise me if those things continue heading into the end of the year. But I am also knowing when you zoom out to the larger time frames and some of the larger projections, we are starting to get near some of those price targets, right? So, the other thing I want to talk about is the sectors above their pre-2022 bear market highs. You've got tech, industrials, financials, materials, healthcare, utilities, staples, all above those previous bear market highs. And in this chart, it's a little bit dated, okay? It's from earlier this month. But you see discretionary energy, communication services, which after Netflix earnings has actually came up and made new all-time highs. And then you've got real estate in here. So when we break these down and we're taking a look at these, look at XLY, guys. Okay, we have a base, and here we have another base. We're just continuing to see base breakouts in consumer discretionary stocks. Amazon earnings is right around the corner, and that could be the potential catalyst that breaks us out of this. Now, could we fail? Yeah, that's very possible. But when we take a look at price action and we see that we rejected here, we rejected here, we rejected here, and then what did we do? We actually retested. So bulls are in complete control of the price action right now from a very long-term perspective, from a multi-year breakout, from a 2, 3 year period. We can see that we break out, retested those previous price levels, and we're forming a pattern that we've continued to make higher highs on, right? We had the base pattern here. We broke out, had a high, made a higher high, made a higher high. And now what are we doing again? We're forming another base right along those previous levels here, looking to see if consumer discretionary stocks can continue to break out again. XLY is looking very good. When you take a look at its max drawdown, we're currently about 5% off of the highs, at negative 5% from its previous highs. You take a look at something like energy, okay? Even energy, it doesn't look the most bullish, okay? But again, from a technical analysis standpoint, what are we seeing here, right? We're seeing a breakout retest of the trend here where we've retested once, bounced a little bit, pulling back now again, retesting. If we were to draw a level right here, you can see that this was resistance, right? And now this potentially could be support. So even energy doesn't look bad here. The only thing I would caution people of is that oil prices have been dropping, okay? Oil, crude oil, and XLE and energy stocks tend to have a close relationship with each other, but it's not always a one-to-one ratio, right? So we could be seeing an exaggerated sell-off in things like XLE and energy stocks while still potentially perhaps getting a rebound here off of a key level, right? And remember, the whole purpose of this is if you guys are scared, right? It's for scared money. Valuations are too high. I don't want to invest in certain things hitting new all-time highs. There are sectors of the market where you can potentially dive deeper, such as discretionary, as we're discussing, energy, as we're discussing, and also real estate stocks, right? You take a look at the real estate sector, XLRE, still down over 14% from its all-time highs or from the previous 2022 highs right here. And we can see yet again a very, technical setup that we have. We have a rejection, we have a rejection, and then we have a retest, right? So we see that bulls are stepping in control of price action and rebounding and buying at certain inflection points where bears were previously in control. Is that going to be a signal that these other sectors potentially can have a catch-up trade? We've seen that so far in the back half of the year in Q3, as we displayed earlier, with Mag 7 stocks underperforming the other 493 stocks in the S&P 500. Now, is that something that's going to continue? We'll have to see, right? It's very possible that a lot of these other sectors can roll over, especially in terms of relative performance, if all of these Magnificent Seven stocks report and react good to earnings. All right. We'll move forward again, and we'll talk about the January barometer. Okay, so this is something for the bears here, and this is something that I really have become accustomed to liking this data. Okay, and so each year you see this data updated, and you're going to see the same slide probably again next year with updated data again. But most of the times that the market peaks, it's in January/December. Now, the big question is why, right? Why does this even matter? Why are you telling me this? Well, the whole point of this is if you realize that 40% of the time, which is the majority, right? And then 56 between December and January, but 40% of the time the market peaks in December. What does this mean? This means that generally the stock market continues to rise higher until the end of the year. That's all it means. And sometimes that end of the year rally spills over into the first month of the new year, January, and then you get the actual top. Now, what's a reason for this? Well, a lot of people say tax loss harvesting. Okay. That's a good reason, right? You have a lot of people selling their stuff off in October, November, December, okay, realizing those tax loss harvest gains and then putting that money into other ETFs, into other stocks, into other funds, to keep that money invested, right? And then as the year ends, you see a lot more selling off again for that tax loss harvesting reason. We're in a new year. Okay, let me go ahead and sell my losses, sell my losers, get rid of those, and start the new year off strong. The market tends to perform into the end of the year and generally over a long period of time can continues to rise into the end of the year. So I really love this chart, really love this data here. And this is actually one for the bears, right? Hey, if you guys' thesis is right, if we're going to head into a massive recession in the next 2 to 4 months, it's very possible that the stock market can peak, here in January. So as a bear, there's no reason to rush into shorts and to short the entire market right here. Why don't you rather wait to see if stocks continue heading higher as they historically do in December? And see if that spills over into January, and then potentially see if there's any type of topping patterns, any type of huge signals, whether it be economic, recessionary, or potentially even technical, for reasons to short the market rather than trying to go all in right now just because you don't agree with the current way that the market is moving. Because when you really look at the first half of the year performance versus the second half of the year performance, whenever we have a strong first half performance, the second half performance is generally up above 10%, as we can see in this chart here in the blue line. And when you have a weak first half performance, you generally see highs and then lower highs heading into the end of the year. So we're at this period right here where we had a very strong first half. And so historically, we tend to end the rally off and end the year off with a rally. If you look at strategists, okay, they entered 2024 expecting only 1% upside, and they've been behind ever since. What does this even mean to you? Well, you have to realize that these people work for Wall Street. These people work for institutions. These people are, projecting forecasts. These strategists are forecasting where the S&P 500 is going and then investing client money, right? Investing institutional money based off of these forecasts and these projections. And as the S&P 500 continues to rise above, investors or clients could potentially be hitting up these strategists and these analysts, saying, hey, why am I underperforming the market right now? You told me we were only going to go up 1% in the beginning of the year, and we're up over 20% right now. What are you doing wrong? Change it right now and get me into the market. Okay, that's a very real conversation that not too many people, when it comes to retail investors, realize, or potentially even anticipate as a tailwind for the stock market, is that strategists get things wrong very often, and they're benchmarked to the index. And when the index is outperforming their forecasts, there's a very big catch-up trade that ensues, and is a result of this, okay? Because they're saying, hey, our fund is only up 8%. Our fund is only up 12%. The S&P is up 20%. I need more exposure to Nvidia. I need more exposure to Tesla. Okay. I'm sure many analysts and many advisors got a lot of calls if they weren't, long Tesla when the stock had its largest update that it's recorded, maybe in history or over the past 10 years, rising well over 20% in a single day. A lot of people are saying, hey, that could have made my year. Why aren't you in that stock, for example? Okay. That's how you have to think of things. It's not so much what your opinions are, but what are the opinions of people that drive the market? And when you take a look, the bull market returns have been tiered with cap size. All right, and so essentially what you're looking at from top to bottom are, the largest, 1 to 10 market cap. Then you have the 11 to 100, 100 to 200, 200 to 300, so on and so forth. And you can really just see that, the top 10 market cap stocks in the S&P 500, have really outperformed the rest of the other stocks. There's no secret about that. Now, we have talked about how they have lagged. And you can see that very evidently in this chart, right? If we take a look, right, what is this? A high and a lower high. You look at everything else here, we have highs, higher highs, highs, higher highs, highs, higher highs, generally throughout the rest of the market, except when you get to the Russell 2000. Okay, the Russell 2000 small caps have been lagging very hard. And in my opinion, that's very much due to, the Fed funds rate. A lot of those small cap companies within the Russell 2000, they rely heavily on debt. All right. Oftentimes they're unprofitable. And, it's very hard for unprofitable stocks to get good rates on loans. All right. These stocks, these companies, they need money to fund them until they get into profitability. And then once they get into profitability, then they can perhaps scale up to a mid cap or potentially a large cap stock. But there's a reason that a lot of those Russell 2000 stocks are in the Russell 2000 is because of their unprofitability. And it's very hard to lend and get money in an environment where the Fed funds rate is so high. So that's been dragging a lot of those stocks, back and holding a lot of them back. And again, when we talk about valuations, we already went over some charts that looked good and that weren't, were still potentially in that catch-up trade below their previous 2022 highs, and previous bear market highs. We can see here that the Mag 7 PE ratio is right around 26.7, the S&P 500 right around 20.5, and the S&P 493 was still below 20. Okay, so if you're looking for areas to invest in the market, I know that Google, I know that Microsoft, I know that those magnificent seven names, cover a lot of the space and get a lot of the headlines, but there are 493 other stocks that are still potentially undervalued in the market, where we've seen a very big catch-up trade, right? And maybe a reason for that is because institutional investors are saying, hey, we've got these massive profits, right? We've locked in a lot of these massive profits. We had this big sell-off, due to the Japanese yen carry trade. And what we're looking at now is that a lot of the flows, instead of making lows and lower lows, a lot of that money from the Mag 7 seems to appear to have gone into the S&P 500 and the 493 as well, right? Because those are making lows, higher lows, right? Lows, higher lows. So as we saw these continue to sell off, we actually saw the rest of the market continue to build up higher and saw a lot of funds and or flows into those different funds and stocks. And we take a look at S&P 500 returns with 15%, when we're higher than 15% in Q1 to Q3, we typically see a small October dip with a very strong finish. And, that almost replicates exactly what we're looking at right now, right? We had that sell-off period due to the Japanese yen carry trade. We made a lower low in the S&P 500, and now we're rebounding up, making new all-time highs here. So it's very possible that this chart layout is going to, stay true and that we're going to continue to see a strong finish, with diminished gains, okay, nothing amazing. It's not like we're saying we're going to rally 10-20% in the last quarter of the year here, but typically you do see good gains in the later half of the year. And when you look at S&P 500 tracking historic average points to further but slowing gains. Okay, so again, we could see a sell-off here. Typically October is very bearish. September even is kind of bearish. But we haven't seen those seasonal trends play out. Okay. And so what you're looking at is you're saying, hey, stock market is actually very strong during a seasonally weak period. Does that point to future weakness to you, or does that point to future strength to you? To me, that kind of points to future strength. Now, are we going to see a sell-off related to the election? The election is right around the corner. We typically see a sell-off heading into the election, and that hasn't been the case this year, again, seasonally. But that doesn't mean that we can't have a sell the news rally, right? If the market is pricing in a Trump victory, which does seem to be the case as Trump has been taking the lead, it's very possible that this could become a sell the news event. And that's very important as well for the bond market, as it's actually been having an adverse effect on the bond market. And Trump winning has actually been crashing the bond market. Okay. Again, I dropped a very good fundamental video on TLT describing all of those things in detail. You can watch that video in future, to get that information. This video is more going to be technical on TLT. But diving back into the stock market, when we look at the job opening peak, okay, we've seen payrolls gone up over 7 million. We've seen the labor force has gone up over 4.5 million. The claims here are generally flat, and then job openings have gone down 3.5 million. So the labor market actually does seem resilient. Okay, I know there's a lot of data. You look at the unemployment report, different things like that. It can get very confusing. But 314 Research does a really amazing job here of just, annotating and showing it on this chart from a really good perspective when you look at the job opening peak, and you can see how payrolls have gone up, the labor force has gone up, jobless claims are flat, and then job openings are actually down. Again, just showing a resilient labor market, which is one of the reasons why we've seen the bond market continue to sell off. Now, 314 also has a really good signal here that I have not seen before. And for all of you bears out there, this may be the thing that you really want to pay attention to. And this is going to be residential construction jobs remain our source of truth. So we've got the residential construction jobs up here on the top. And then, we've got the payroll, the residential construction payrolls 3-year drawdown. And we've got recessions highlighted in here. And you can see that each time this starts to go in a downtrend and this peaks, a recession, follows very, very soon. And we're just not there right now. We're still in an uptrend in this. So when this starts to roll over and this starts to go lower, that is definitely going to be a very large warning sign. And this is, I think, one of the most important things that you guys can pay attention to, along with the yield curve right now and the unemployment report, the unemployment percent. I think that this is a chart that you guys want to analyze and want to pay attention to if you're really truly anticipating a bear market, a massive recession coming into the US economy. This chart right here has been a very, very, very good sell signal. And we're continuing to just see an uprise and incline in this chart at the moment. Now, I did start a completely free newsletter for you guys. Okay. Thank you to everyone who made it this far in the video. Be sure to subscribe to the channel and smash that like button. I put out free trade ideas in this newsletter. Okay. I give out free financial and trading related content, and many of these trade ideas have worked out very, very well. There's a website associated with it. Okay. It's completely free to sign up. You can go check out that website and review some of those trade ideas. And many of them have worked out very, very well, especially over the last 2 months. Okay, so check that out. If you do want to join my Discord, the Investment Intelligence Private Trading Group, promo code Powell will get you guys a discount on that. Okay, so the link is in the description to join that. Inside of there, you get 20 plus swing trade ideas every week, custom scripts and indicators, exclusive intel, exclusive chart layouts, and much more. You can see some of the option returns from some of the trade ideas that we've been trading. A lot of these are from products that I've launched individually. Okay, so you can join the Investment Intelligence Private Trading Group and get full access. Or if you're someone who's looking for swing trades, right? And if you're looking for swing trades from less than a month to 30 days to 60 days, the Pulse Radar is going to be perfect for you. Okay, so you'll get access to the Pulse Radar, or you can buy the Pulse Radar just by itself. And in there, you'll get really high quality trade ideas and setups along with buy signals. PCG was a really great one that we covered with the inverse head and shoulder, reclaiming its pivot high anchored VWAP, and then also looking at a breakout on the buy sell indicator here. And you guys can see that the call options went up well over 1000% on the shorter dated and well over 200% on the longer dated, smashing all of the bullish price targets to the upside. As you can see, the stock was trading around 18 and we had our highest bullish price target at 20.11, went well past that at 20.34. Then there's the zone finder. Okay, these are people looking for potential day trades, very short-term trades, right? These sometimes can hit their targets in one day for an intraday trade. And sometimes they're very short-term swings, right? Where maybe they need a couple days or less than a week. So the zone finder, if you're looking to be an active trader, looking for trade ideas every single week, to take profit on daily or less than a week, the zone finder is going to be for you. And we actually debuted the very first trade idea from the zone finder BMY on Bristol Myers, showing the gap up falling wedge that we had, the bullish falling wedge. And you guys can see that that went up again, well over 100%, with shorter dated call options going up over 200% and the longer dated call options going up over 70%. This was in less than a week, guys. In 1 or 2 trading days, the call options on these exploded to the upside. And not everything has to be options trading. Okay. The zone finder, the pulse radar, all of those products are meant to be filtered for liquid stock options and for liquid options traders. But even if you're just, a shares trader, right? We pointed out a very good day trade on MU early in the morning before 10 a.m., highlighting the breakout, targeting the anchored VWAP and targeting this zone up here. And sure enough, we did very well on that. You can see it went from right around 100 to well over 105. Coming up to that anchored VWAP, breaking through our zone here, our initial price target. And you can see people capitalizing on top of that in the Discord. And even other trades like TTEK, right? A lot of stocks that people may not have even heard of, right? We zoomed out, we started on a weekly time frame. We see it hitting a long-term Fibonacci target, setting up a nice spacing pattern. And when we zoomed in, we saw on the 1 hour chart that not only did we have that nice base, but we also formed a bull flag or pennant right above that base breakout level here of 47.68. That's very, very bullish. And what do you see? The stock came up and hit that bullish price target of 49.32 within the same day. So there's short-term trade ideas, there's longer-term trade ideas, and much, much more inside of the Investment Intelligence Private Trading Discord community. I would love for you guys to join. Remember, promo code Powell will get you guys a discount on that. If you don't want to pay for anything, no problem. Okay, I'm not here to shill or, try to force money out of you guys. I provide very high quality content in the Investment Intelligence newsletter. That's completely free. You guys can also check it out and review some of the previous articles that have been published, to subscribers and see if that's something that you want sent directly to your inbox. All right, promo code Powell will get you that discount code if you guys do want to sign up. And I also have the Ko-Fi page. Okay, so a lot of people hit me up. They have a lot of questions, and there's many things that I can't really necessarily just respond to in a simple email or direct message. If you ever feel like you need a one-on-one coaching session, you can click on my Ko-Fi page, click on the commissions tab, and in there you can directly book a 30-minute or you can book a 1 hour coaching session. You can also click on this buy a coffee button, which is basically just a free way to, or a way to give out, donations or something like that for all the free valuable content that I do put out there. Okay, because I do put lots of really great valuable content out there completely for free. And if you ever feel like giving back and supporting the channel, the buy a coffee button is a great way to do that. as I really don't make any money off of YouTube. Speaking of which, help me get to that 10K subscriber goal. Okay, we're looking to get there at 10K by the end of the year. So if you guys can help out with that and subscribe to the channel, share the channel to others, and have them subscribe, it would be greatly appreciated. Thanks for watching, and I'll see you in the next one.